Hi everybody, welcome back to my channel. My name is Dennis and this is part 2 of my series on writing bots that can algorithmically trade cryptocurrencies, including Bitcoin. Today I'm going to teach you about a simple strategy called simple moving average crossover. So let's get started. Let's start with a plot that anyone will have an easy time with. This is simply the price of Bitcoin. It's the daily price from an exchange called Binance starting in 2018. Just the closing price. You can see what you would have made if you bought at the beginning and held on to the end. You would lose money. So let's add in a simple moving average to our plot. The green line is a simple moving average. So what is that? First, let's start with the word average. Average is just taking a list of numbers, and however many numbers you have, you add them all together, and then you divide by the number of numbers that you added together. The average, the mean, everyone knows what that is. The moving part is how many numbers you look at once. And on a chart like this, what we're doing right now is looking back 34 days. So you take the price of Bitcoin the last 34 days, take the average, put it on here. And this technique is used for people trying to lose weight. It's used all over the place, and it smooths out movements. So you can see whether a trend is real or just some statistical noise. So you might be thinking 34 is a pretty arbitrary number, and it is. So let's look at it alongside 140 days. Now, as you can see, the parameters make a huge difference in terms of how these plots look. And an important thing to notice is that sometimes the moving average plot lines cross over each other. So, as I told you, this is a simple moving average crossover strategy. Now let me show you the final plot. Let's set these parameters the same as what we were just looking at. And if you watch part 1, you know that this line, this dashed line, is the trading decisions made by the bot. And, oh, actually this plot is returns and strategy. This shows you how well the strategy did, but let's look at the moving averages. So here is the plot we were just looking at, the price, the two moving average lines, and you can see that the bot changes position from long to short when the moving average plot lines cross over each other. At every point when that happens, the bot decides, okay, if the short-term average is greater than the long-term average, that means that the market price is going to increase in the future. And how did it do? It got 1.55x, and simply buying and holding would have gotten you 0.67. So, well, I should say this strategy returned 1.04, which is 1.5 times better than buying and holding, where you would have lost a third of what you invested. So I can show you now, let's go back to the plot I showed you by accident before. Buy and hold is blue, and these both start at 1.0, and the green is this simple strategy. And it might seem crazy that such a simple strategy can outperform buy and hold, but it does. And you don't need to be looking into the fundamentals of Bitcoin or reading the news. You can just set up this bot to trade for you, and it will improve your returns while you sleep. So you're probably thinking, where did the numbers 34 and 140 come from? Well, they're arbitrary, but I wrote a Python program to find optimal parameters for this strategy. So I implemented the strategy, and I'm simply iterating through a list of potential values for how many days to look back, and the long and short simple moving average, and it's computing them all one by one. All of this code is up on GitHub, so you can download it and run it yourself and try it out. So here's a list of the values and a plot, a heat map plot. Right here you can see the best value. This y-axis is the short look back length, and the x-axis is the long. So here is 76,105. Now let's look in the terminal output. Yep, the first column here is just the index, and we can see how this this pair of parameters performed. And you can see one thing you'll get used to when you're looking at a strategy like this is if there's a bright, well-performing parameter pair, like way out here, and a bunch of bad pairs, then that's an overfit parameter. It's just a coincidence. But if you see the best performing parameters are surrounded by other parameters that performed almost as well, then that's probably a more stable parameter that you're going to be able to rely on. But you should still be recomputing your parameters as time goes on. So that is a simple moving average. That's how the strategy works. People have been doing this for decades. This strategy is intraday, so it works on daily data. A lot of people trading crypto trade more frequently than that. They're looking at every 30 minutes or even less than that. So we can get into all of that later, but for now, download this code, run it if you're interested. I recommend the book Python for Finance. There's a lot of good resources out there for people who want to make money trading crypto. So let me know in the comments if you have any questions. I'm going to continue this series, so good luck, have fun.